Yeah, so I guess the idea we should start from is that, CapEx is, telecoms is a very capital-intensive industry. Technological progress never stops. So if operators stop investing, they risk of losing an important part of the technology cycle. And the issue that we have today, because of the economic crisis, is that capital is even more a scarce resource. So for operators to continue investing, they need, firstly, to reassure investors that the industry can attract again capital, has done in the past, maybe in the 90s, for example. And so, as you rightly say, this requires a few elements to come together, because the problem is that in most cases, so take fiber deployment, it is unproven on what sort of timing that this type of fiber will yield a decent return, and the reason being that demand is unproven. So what the industry would need more is to have a clear framework, a clear perspective of where the incentives are. And if it's true, as we have seen in other geographic areas like the United States or some Asian advanced markets, that the investments in next generation network have essentially been a catalyst for economic development, what we would need also in Europe is to maybe take a similar approach and make sure that if a transparent, supportive regulatory environment is set up, then operators can continue to bring the sort of capex that the technology cycle requires, and investors also would feel comfortable to back operators' initiatives. Well, some markets they've taken extremes approach, and for example, you mentioned the Australian one is actually one of the markets where some disruptive measures have been taken, and when you push regulation to the point of imposing network separation, in our view, that can destroy quite a lot of value. What we would actually prefer to see is more, a light approach of regulation to the industry. You just need to remove disincentives. So, for example, if you prevent essentially cable operators to continue deploying their alternative infrastructure because alternative operators with very limited capital commitment can use the incumbent's network at a very low unit cost. That's a disincentive which needs to be removed. So I would feel more comfortable with a framework that has a light approach, removes disincentives to investments rather than being so intrusive up to reach the point of those markets that you mentioned. It's not a clean situation, but on the other hand, the quality of competition that has developed over time in the industry, especially in the European markets, is the one where the focus has really been on getting prices as low as possible, so providing choice to consumers at the cheapest price possible. But my point on this is that how really good is the quality of this competition when essentially you have everyone using the same infrastructure, just producing different brands, different pricing policies, but essentially delivering the same type of service. So I agree with you when you talk about competition, that it's probably unsustainable to have 20 brands offering all the same service, just using different names or different pricing strategies. But still, if regulation stimulates investments, we would be in a position to have a strong incumbent, a strong cable operators, and probably, given that wholesale is a lower profitability model than altnets, we'll probably have also one or two alternative wholesale platforms in each market. So I think that a market where you have 3-4 large platforms and the incentives to investments will be a good compromise between competition and investments. Mobile is in part a less capital intensive, so deploying a mobile network is easier than digging the ground and deploying fiber. Actually, 85% of a fiber capex program is actually about engineering works. So mobile is easier in that respect, but actually is trickier to manage communications in a wireless way. And now that we are experiencing this explosion in terms of data traffic, which is growing exponentially, since the iPhone was launched a couple of years ago, and is expected to continue to grow so fast. The capital intensity of that industry is also probably increasing, and that's why we are seeing obviously hunger from operators to buy spectrum, because spectrum is equivalent to capex, if you like. So either you deploy more base stations or you buy more spectrum. It's a substitute, one of the other. But also we are seeing an increasing trend for network sharing, cooperation between operators. So operators that have enough of a scale are finding ways to reduce the capital intensity. You also have operators that are struggling, and they have remained pretty small operations over time. I'm thinking, for example, about the third or fourth entrants in each market, still below 10% market share. So for them, it's quite painful. So probably we would have it is likely that we will see some consolidation in the markets among the smaller players as the capital intensity grows. The industry is so capital intensive that in a way incumbents need proper regulation, and regulators and governments need incumbents. The incumbents are the only one with a strong enough balance sheet to think about deploying next generation networks. So and this strength really comes from their scale advantage. So anything that would destroy this scale advantage, be it structural network separation or other forms, it's something that I wouldn't view in a positive way. It's a hugely also engineering complex exercise to separate structurally a network. Where do you put your pillars? What stays with the network company? What is the service company? It breaks also the incentives between network deployment and services. So suppose that the service company wants to launch a HD TV platform, then they need the network investments to be there for the service HD platform to work properly. So you see, there's a lot of risks and diseconomies that can be triggered by a form of separation. Having said this, it's fair to say that the operators have probably taken a bit by surprise by the whole development on the services side. So with the developments of first Apple, then the iPhone, and then Android, which is likely to become even bigger than the iPhone. But the important point is that even if on the services side there will be the risk of disintermediation for incumbents, the point is that unless the network works properly, unless you have a fast connection that supports all these services development, the industry is not going to go far. That's why we think that the scale advantage should be preserved and should be instrumental for the future developments of the industry. Well, I suspect that we're going to see hopefully gradual developments towards a more constructive environment. Even if you talk about fiber deployment, it's not like going to the moon. So either we reach the moon or we don't at all. It's a project that can happen gradually. It can happen following some prioritization, a prioritized approach. it will be regulation is unlikely also to come all at once. So it is unlikely that we're going from an uncertain picture to a completely certain picture. So we'll see an interaction and hopefully cooperation between incumbents and regulators, because as I said earlier on, they need each other. The economy needs these infrastructure of the future. We need next generation networks, and that goal can be achieved only with a cooperation between the different parts.